So welcome to part two. Part one was delivered by myself last Thursday evening, and that was really about kind of teaching the basics, I would say, the basics of the basics, so running through some technical analysis, talking a little bit about strategy and risk management, but ultimately really focusing on the thinking direction side of things. Tim today is really going to take the bulk of the presentation into a trade group style. I'll explain what that means in a minute. Once again, these sessions are recorded, so you should get them emailed to you, and you'll also be able to find them on our YouTube page. Like and subscribe if you can, and keep up to date with the different types of webcasts we run. So we do run some other type of webcasts, some a little bit more advanced sometimes. We do run podcasts with some very interesting topics. We're pretty on the ball when it comes to the market and news and everything. So we're right on the edge of things, right? So be sure to go and check us out on YouTube. All right. So again, if you might be wondering who we are, I like to have this slide in basically every webcast, just in case people who are joining us for the first time, or you haven't had a chance to listen to part one yet. We're Trader Circle and Emerald Financial. Now, two different businesses, but with like sister companies. Trader Circle has been around since 2005, delivering education on trading, and ultimately one of Australia's best full-service trading desks. So really our goal is to support traders. We're traders ourselves, and we want to support other traders in their trading. Right? We want to be able to provide you advice, help you with strategy, price things up, and execute orders. To get you to the point where you're feeling confident, we do run education as well, and I'm going to run through how our beginners course works at the end of the session. So if you are interested in learning from professionals and more importantly getting supported by professionals, stay on to the end, and I'll run through the course that we run for beginners. And Financial, on the other hand, is actually probably more applicable. It is focused more on investing. It's more about the longer term, building an nest egg, capital growth, buy and hold kind of approach that you would assign to the word investing. That's what really Emerald Financial is about. Okay, so today's presentation, like part one, is being delivered from Trader Circle. Now today, what we're going to run through, Tim's going to give you his market view, right? He's going to tell you what the state of affairs are at the moment. We're going to look for some new trades. We're going to give you a couple of trade examples, and then I'm going to come on the end and explain what we think are the core skills you need in order to be a successful trader and how we deliver it to our clients. So my name is Karo Cornips. Again, there's a lot of you online who are familiar with me. I've been in the business for about 8 or 9 years, and that also goes for Tim as well. A lot of you should be familiar with Tim. But Tim's also been with us for 9 years, roughly, I would say, something like that. And both of us work on the trading desk. Tim's the head trader, so he's the head of the trading desk. So I work on Tim in that capacity, and along with the other advisors, our job is to give advice to traders, to help them price up strategies, help them get out of trades, to give them trade recommendations, to basically act as full service advisors to our clients. Right? Tim also is responsible for developing a lot of other key areas of business, and I myself am the head trainer for options trading. So if you come along and learn options, and also if you come along and learn this course, there's a good chance you'll be spending a lot of time together. That's one thing that really separates us, I would say, from a lot of other businesses out there. Rather than just sitting you in a room or handing you some books or watching some YouTube videos, whatever it is, what we actually do is we get your own personal trainer, you get plenty of support as you learn, and as you practice, and then as you start integrating it into real trading, basically. Now, just before we get into the guts of it, it's important to understand that any advice contained in this presentation is general only. So we're not taking into account your personal circumstances, and that ultimately means you need to decide for yourself as to whether that advice is appropriate to you, right? And that goes for basically everything that we do here. It's general advice only. So I'm going to pass on to Tim, and if you've got any questions, just feel free to type them in. Thank you very much, Karo, for that intro, and thank you guys for jumping on today. The webcast today, really, the purpose of running these things is to really demonstrate to the broader sort of trading community out there and the broader beginner community out there that there is a structured way of doing this, that having a structured way of trading or investing is very, very important. Okay, if you want long-term success, interacting with the stock market in any way, shape, or form, you've got to have a process. You've got to have, some kind of guidelines or rules that you're going to follow to make sure you're consistently approaching the market. And when you are consistently approaching the market, you're doing it in a way where you're managing your risk, and doing it in a way where you're going to get consistent, consistency out of it, right? If you're haphazard, if you're going in the market because you've read something on Facebook, if you're going into the market because your best mate across a beer has turned around and said, go buy this stock, or I've been buying this stock and I've made 50% out of it, it's not going to give you your desirable outcome in the long run, right? What tends to happen with that pub type of analysis, guys, is that he's made his 50% profit, or his 10 or 20% profit, or 100% profit. Doesn't mean that's the right time for you to get in, right? So the big thing with the stock market is timing, right? It is all timing, and that's what we really showed you last week. Karo would have gone through some technical analysis techniques. So it's important to, one, know how to analyse the market, and whether you use fundamental or technical. One way, technical analysis is about timing, okay? So for me personally, when I trade or invest, I use a combination of both fundamental and technical, okay? I look at the market and particular stocks fundamentally. I have a group of stocks that I like based on that. I only get in though when my technical signals line up, because fundamentals can play out in the long run. Okay, it doesn't mean it's just because something fundamentally looks good, it doesn't mean today that they don't buy it. Technical analysis tells me which day to buy it. It tells me which day to sell the stock. So what I'm going to do today is I'm going to mainly focus. Then what I want to do is pair that with mini warrants, which is one of the derivatives we teach. So the idea of that is I want to show you, start to finish, how to find a trade, price a trade up, pick some stock levels, and just have a small conversation about how we manage it as well, right? And that will give you just a bit of an insight on how we do things here. And that's what this is all about. Just giving you that little bit of insight to show you perhaps what you don't know about trading, so you can go out there and learn, right? Okay, so let's get started. And where I always start is talking about the overall market view. Okay, so it gives me a sense of where I think, over the short to medium term, where do I think this market's heading, up or down? Okay, and it gives me a feel of momentum, sentiment, things like that. Okay, so XJO is the top 200 stocks of our market. Okay, so we use this index over the All Ordinaries. You probably have heard these terms before, perhaps on the news. All Ords, basically you can't trade the All Ords, right? The XJO you can trade, right? So that's why we look at the XJO. There is various instruments you can use to trade this index, mini warrants being one of them that I'm showing you today. Options being the other, which all run off futures contracts. Now, we're not going to talk too much about that. I do want to show you some examples of trades using mini warrants today. I'm not going to touch on options. I'm just going to stick to the mini warrant side of things. So let's show. The first thing I want to look at, guys, is what is the trend. Okay, so this is set on a daily chart, and this goes out to the bottom of the pullback last year after COVID began. So basically, what is the trend? It's quite obvious, isn't it? The trend is up. Higher peaks, higher troughs, higher peaks, higher troughs, and the trend is definitely up over the medium to long term. We're still on that trend, by the way. Okay, we've had that nice big acceleration recently where we've pushed into all-time highs. We've tested that 74 level. Now we've had a little bit of a breather. Okay, and this is very common to what we see in the market. Okay, you can see that as I come back through here, we have a run up. Bit of a sideways movement to hit the trend again, run up, we've got a sideways, pull back the trend again, run up, and now we're pulling back going sideways into the trend. Okay, so we are in an uptrend, but what phase are we in right now within that uptrend, guys? Right, it's quite obvious. Okay, we've been in a bit of a what we call a counter trend movement, and we're moving counter to the overall trend. So the market's just pulling back a little bit. It's taking a bit of a breather after such a large movement. So what I say to myself here is, what's the most likely, one, movement in the short term, and two, movement in the medium term? Well, in the short term, really, the likelihood of sideways is very, very high. The 73 level through here has been a bit of a magnet for our market, and we've been range bound between roughly 74 and 72.12. And we've been around now for about maybe a little bit over 2 weeks. Okay? So for me, short term, the view is sideways, right? I think that's kind of obvious there at this point in time. Is I expect the market to continue to have 1 or 2 days up, 1 or 2 days down, until we see a breakout of what we call a pennant pattern. Okay, and once that pennant pattern breaks, that will give me a signal, depending on which way it breaks, of how likely to move. So that's what I've been waiting for technically right now. Okay, is that break of that pennant pattern. Once that breaks, then I'll start adding or subtracting trades depending on what's happening, right? So what do I mean by that? Right now, let's say hypothetically I've got 3 or 4 bullish trades on the market. If this pennant breaks to the downside, I might close 2 or 3 of those trades. Okay. So that is what I kind of use this type of analysis for, is more of a portfolio view. How many trades do I have? Which direction do I want to preference? And how do I want to manage that from here? Looks like a few people are having sound problems, guys. Is that across the board for everybody, or is it just a handful of people? Can you hear me clearly, guys, or is it a bit muffled? Okay, give me a second. I'm just going to go in and just double check which microphone is selected in here. Let's see why. Okay, is that better? Testing. Is that better? Yeah, I'm so sorry, guys. I had the wrong microphone selected. That should be a lot better for you. Okay, so basically, at this point of time, you know, market, I'm bullish long term. The trend is still up. Technically, you've got to be bullish long term. We're just waiting for reconfirmation of that. Now, the next thing I like to look at to form my view is the US, because guess what? They're leaders. Okay. So if the US market continues to grind higher and higher and higher, we won't resist but to follow at some point, okay? So I've always got a sharp eye on the S&P 500, and the S&P 500, as you would guess by the name, is the top 500 stocks in the US, okay? So you've got the Dow Jones, you've got the S&P 500, and you've got the NASDAQ. S&P 500 for me is the more important one, because when you look at an equities market, so when you look at markets in general, right? So if I'm a financial advisor, I'm looking at bonds, I'm looking at property, and I'm looking at equity markets, right? So what I want to identify by looking at these indexes is money flowing towards equities, right? That's the level I'm looking at right now is, okay, do I want to be in equities right now? Are equities bullish? Are they moving higher? Okay. That's what I'm looking for when I'm looking at the S&P 500 and the XJO, right? The S&P 500 has all sectors involved, where the NASDAQ is heavily driven by tech, discretionary, communication services. So the NASDAQ doesn't serve that purpose for me. The Dow also is very industrial driven, so it also doesn't serve a purpose. Here, the S&P 500 serves a larger purpose because it has most sectors involved. So if I want to get a true measure of whether equities are outperforming other markets, whether it be housing or whether it be bonds and that sort of thing, the S&P 500 and the XJO are the most diversified. So that's what I like to look at. All right, so what are we seeing here, guys? Once again, we're seeing an uptrend, okay? It's very uncommon to see the S&P 500 and the XJO on a different trend. But what is common to see is what happens in the short term. See how the S&P 500 is grinding higher, but we're grinding down to sideways. So we're seeing a disconnect right now. So like I said before, though, if
this continues to edge up higher and higher and higher, eventually we're going to follow, right? So this is what I like to look at. So let's monitor this. Let's monitor this very, very closely over the next 2, 3, 4 weeks. If that disconnect continues, I will continue to load up bullish on our market until it corrects. Yeah. So that's how I use both of those indices together. All right. So what can I draw from this? The long-term trend is up. The short-term trend in the US is up. The XJ is having a breather. Right. Okay. That's what I can take from this. But I am bullish overall. Okay. Medium term. Just waiting for that next signal. Okay. A few fundamental points to keep an eye on. One, we've just finished the financial year. Okay. There's often weird movement in our market in that last week of June. Last week of June is usually one of the weakest weeks of the year. Okay. From a consistent point of view, right? So consistently, every single last week of June is usually a bearish week for our market. And that's what we've seen. It's very typical. You see a lot of tax selling. You saw a lot of stocks yesterday, like Kogan, have already been battened down, been hit down quite sharply over the last 6 months. Saw some heavy selling as people took those losses. Okay, so that's that typical sort of end of financial year weird movements in our market. Okay, so what's next? Okay, what's the market focusing on? Inflation, we would have heard all about that, okay? So any economic data coming from the US, any inflation number coming from the US, just keep an eye on the market. It can affect the sentiment very, very quickly. The Fed, and around any Fed meetings, expect the market to be a little bit whippy, okay? They're kind of the two main drivers month on month that are moving the market around. So interest rates is where it's at, and that's why people are worried about the Fed, worried about inflation, okay? So they're your long-term factors that you want to keep an eye on in this market right now, all right? Because that's what changes the game, all right? If interest rates start going up, guess what? That trend that we're seeing on the market right now could change to down. That's where we start talking about 10, 20, 30% corrections. That's where we start talking a bit more negatively if interest rates go up too much too quickly, right? But that's not reality yet, yeah? That reality might not be for another 2 years, okay? So right now, guess what? We're bullish. Right, there's heaps of stimulus. There's more stimulus coming. Central banks have never been this accommodative before. The current environment cannot get much better for equities as a whole asset class. Okay, it just doesn't get better than this, guy. So if you go measure historically, it doesn't get better than this. Okay, it really doesn't. Now's the time for equities. I still think markets are going much, much higher before we're going to start seeing this balloon pop, right? And we are building another balloon, guys. We are pumping up another balloon. There's no doubt about that. But sometimes we can go 5 to 10 years pumping a balloon before it bursts. The last balloon that bursted was caused by COVID, right? There's always a catalyst, isn't there, right? The whole time we're talking through this period, guys, for about a year and a half, a year, all the doomsdayers were out there. They were all screaming for the market to pull back. They were screaming it for about 2 years, okay, especially for the US market. But guess what? They were wrong for 2 years, and they were finally right because there was a catalyst that came from COVID, right? So be careful listening to the doomsdayers out there at the moment. There's plenty of doomsday articles coming around, especially a couple of weeks ago when the Fed was talking, right? So you've got to just bring it back to basics right now. As long as the central banks aren't actually doing anything, as long as Biden keeps pushing for more infrastructure spending, more stimulus, the US market will keep going up and will drag us up with it. Okay, that's the big picture, right? Something has to change in that dynamic for this market to really come off in a big way. Now, don't forget, there's always a 10% correction on the horizon. There's usually one every year at least, right? So don't forget about that. I'm not talking about one of those. Okay, so we're bullish, right? Factors for our market, the things that might have taken the wind out of our sails over the last few weeks is the obvious breakout of COVID in New South Wales. We're really going to have to watch how that dynamic plays out in the coming weeks. 20 cases a lot, guys, okay? And we've got a lot of other states all locking down because they've had a few cases as well. So we've got 3/4 of Australia locked down right now. That's going to be weighing on sentiment, and that's why we're seeing the banks come off a little bit. We saw the REITs come off a bit. We saw the travel stocks come off a bit, and overall appetite for risk has dropped. dramatically here compared to the US. And I believe that's where the disconnect's coming from, is that COVID breakout, lack of clarity around vaccine rollouts. I think that's where this disconnect's coming from, right? We need clear path forward on vaccination. We need clear path forward that we've got this COVID under control, right? And that will come in the next 2, 3, 4 weeks, depending on how bad it gets in New South Wales. So just watch that news play out. Get ready to go long again. That's my opinion right now. All right, let's get into the stocks. That's a broad brush view. That's the type of thing we talk about in our market views every morning. So we put out a market view every morning to our members that goes through what we believe the markets are focusing on right now, whether we believe it's going to continue going up, down, sideways, whatever's happening at that particular time. So as part of our service is to keep everyone up to date about what the markets are doing overall. Okay, let's flick through some stocks. If you've got some stocks you want me to look at, please put it in the chat box now. Otherwise, I'm just going to start going through the list. There's a pretty big list here in front of me that everybody's already sent in anyway. So I'll start off with the banks. I've got a couple of banks in front of me here, NAB being one of them. Okay, so once again, the first thing we do is we have a look at the trend. Okay, so the trend for NAB right now has been up. Okay, so you had one line through there, and then we've accelerated sharply off that. Excuse me. Now that sharp acceleration is broken, and if we zoom in a bit, you can see here what's the current trend. Well, it's not down because I don't have lower peaks and lower troughs. So I've got a sideways trend. I've got what we call a channel. And that channel is between 25.83 thereabouts and 27.50. Okay. So what it is doing is forming what could be a reversal pattern. We don't know yet. It's too early to tell. If anyone that knows a bit of technical analysis, that's a double top, but it's not a confirmed double top. The confirmation of the double top only happens if this support level here breaks. So it's not a double top yet. Okay. So we've got signs of potential reversal of the trend happening here. Too early to tell. We're just hanging back, waiting. Okay. Overall, up until about maybe 2 weeks ago, I was very, very bullish this space. But now there's a bit of a flattening of the yield curve happening, and also people are starting to get a little bit worried about the whole increase of interest rates and things like that in the coming years, and the tapering of the bond buying, all that sort of jazz. Everyone's questioning whether we're hitting the top of that sort of cycle for the banks. So what could happen is a cycle out of the banks and into the miners, and I think that could be likely, because the banks are getting a bit more expensive, where the miners are still very, 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 very cheap at these levels. Okay. All right, so for me, NAB, you're tentatively, I'd be a bit unsure right now, waiting for confirmation. See, you got a little bit of a downtrend line here and support. As it's getting crunched between those two levels, I'm waiting for which way it's going to break out. If it breaks to the upside, I will retain my sideways to bullish view. If it breaks to the downside, I think it could get as low as 24 before they see value and push it back up again. Okay, so 24 is what I'm seeing from that double top pattern. Okay, and also got my 200-day moving average down at that level as well. So I would be targeting levels down there somewhere if that support level breaks. Okay, so that's my view on NAB right now. Bendigo Bank, okay, being one of the smaller of the banks. Okay, similar sort of story, that it is topping out a little bit up here now. Got a bit of a double top pattern, but we're still holding trend. This hasn't turned into a channel yet. The trend is still holding. Okay, we are definitely pushing into a pennant pattern, and we're waiting to see which way it's going to break. Okay, so keep an eye on this. Right, if it breaks back to the upside, then you'll have a small bullish trade back to resistance. If it breaks to the downside, same story as before. You might have a little bit of a pullback in the banks happening. Now, the chances of this happening, a pullback happening in the short term, I think is fairly low. The reason why I say that is CBA reports in August. So that's maybe 5 to 6 weeks away from now. It's very rare for a bank like CBA, which usually is one of the leaders of the banks in the way of movement, to sell off into its report. It usually will go sideways or up into its report. And then depending on how it reports, that's where it will move from there. That will usually be the leading factor for the banks. Now, we're in a unique situation right now because CBA is extremely expensive right where it sits, okay? If you look to the price earnings ratio, okay, so we look at the earnings of a company divided into the share price, CBA is running expensive at 20 plus PE ratio, where the other banks are only sitting around 14, which is fair, okay? So it's an interesting dynamic. If anything, I think CBA should be sitting down near $84, whereas the other banks should be up a little bit from where they are. You know what I mean? So it's a bit strange how the market's priced that space right now. But nonetheless, look, I don't think things are negative enough yet for a pullback in this space. I think sideways for the banks as people rotate into miners. Okay, that's my prediction for the next month or so. All right, so that'll cover off your banks. Let's move into miners since we've talked about the miners. Quite a few of you asked me about BHP. Now, BHP is extremely cheap at these levels, believe it or not. Okay, yes, I know it's gone from $26 to $40, $50, okay, but it has the earnings to back that up, okay? These guys are growing 30, 40% a year at the moment because of commodities rallying. Okay. Now, in my opinion, commodities are going to stay at these levels for a few years. You're going to have the whole world infrastructure spending for the next 2 or 3 years to rebound their economies after COVID. So that's high demand for copper. All right. And copper also is in high demand because of this move to green energy. So I think demand for copper is going to stay high. Demand for iron ore and iron is going to stay high. Demand for most base metals are going to stay high. Now, BHP gets most of its revenue from copper, iron ore, and crude, okay, and oil. All right. So those three things are doing extremely well right now. Okay. So BHP, I'm still bullish overall. Technically, we've got an uptrend in play, but we've gone into a bit of a sideways phase in that trend. We're struggling to push much higher than what they did in February. You see here in Feb, they had a nice rally into its report, pulled back after the dividend. That was a lot of negative talk around China and iron ore coming back down. It took another run up, okay? And then once again, you've had a lot of negative China talk. So this has been suppressed because of negative China talk, guys, okay? China keeps coming in saying that they're going to keep commodity prices lower. Well, they're not successfully doing it just yet. Copper's not far off its all-time high. Iron ore keeps pushing back up again, okay? You can see it again today. It's still sitting just under 1,201, okay? It's a September contract. That means iron ore at 212, 215 US a ton. It's crazy pricing. I think it's going to stay high for a while. Therefore, this has probably got a nice run in it soon. Technically, it's not the day to get in, okay? So anywhere near this trend, I'd be getting in. If this confirms a break higher, I'd be getting in. In fact, we're already in this, okay? And I'll show you that now, okay? So basically, yeah, look, that's where we're at now. If it breaks through this resistance, it's probably going to go to 52 or much, much higher, okay? So I'm extremely bullish this space, okay? But it is all about timing. All it takes is a bit of negative China talk and everyone hits the sell button in the short term, right? It's all about timing, okay? It really, really is. Okay, so I'll quickly show you our trade on BHP right now. We put this out on the 22nd of June, okay? And this is a mini warrant, BHP KCG, right? So let's go back in our time machine real quickly to the 22nd of June, which is just here. Now, what was the reason why we got into this trade, guys? This had a big pullback. It tested the uptrend line, tested support levels, and then we saw buying come back in. Okay, we saw a typical buy signal there, and that was pretty obvious for us. Good volume behind it. Indicators showed everything they needed to show, and we had a nice little bounce. So we got in, guys. We suggested a mini warrant at $8.49 per mini. Okay, we suggested 300 of those as a minimum risk. Okay, which means that any of our members could have taken on a higher risk if that's what they're comfortable with. We've suggested a stop at 38, okay? So let's go look at the numbers on that. So we give a bit of analysis, obviously. So what we typically target is roughly a 20% or more profit, okay? Depending on how much higher we think it's going to go at the time. So at minimum, we want 20%. So 48 resistance, okay? So if I go back to the chart at the time, there's a bit of resistance here. Actually, it's not even that high. No, I think I might have been targeting this sort of resistance through here at 48.27, yeah? Right? Okay, so if it hits those levels, okay, you're at roughly 20% profit. And this is the type of analysis that we do, guys. Okay, so we punch everything in. Okay, I haven't shown you that. We'll punch everything in, and it spits out this matrix. Upward movement, percentage profit. Okay, so 48, 67, you're making 22%. Okay, as time goes on, there is an interest charge behind the derivative, and that's what's pricing that in through there. Okay, so it eats away at your profit over time. Okay, so first thing we need to test is where we think it's going to go, roughly 48.21. Okay. And then where we're going to place our stop. Our stop's always going to be around support, okay? In this instance here, sorry, that was strike, not stop, my apologies, guys. Our tech stop was 45.52, all right, which is roughly support through here, okay? You can see that on his chart, 45.52. And if it broke through that level, you're losing not even 20%, okay? So what's the goal here, guys, out of trading? What are we trying to achieve every time we place a trade, right? We want to make sure that if the trade goes against us, we're going to lose less than what we can gain on the upside, right? Think about the math behind that. If I do 10 trades and I get 7 of those trades right, and every single one of those trades, I'm making 25, 30% profit, 20% profit. But then on the 3 losing trades, I only lose 18, 19% on those 3 trades. Guess what? I'm making money, aren't I? Right? Now, that's how you make money trading, guys. No trader in this world gets every single trade right. It just does not happen, okay? The way we make money as traders is we get more right than wrong. That's what we aim for, right? And this is what we teach within our rules, and this is a realistic expectation of our rules. Get more right than wrong over a longer period of time, okay? So you want to measure yourself over 12 months. More right than wrong, okay? So you're aiming for 60, 70% success rate in picking direction. Let your profits run higher than your losses, which means you need to be disciplined. You need to be disciplined in closing your trades out quickly. And that's what we teach in our courses, is a discipline about getting out quickly. All right, so this is, and then what we do is we use tools like this to make sure when we set our trades up, we're managing the risk in a way that if we do get stopped out, we're maintaining that dynamic, okay? Maintaining that dynamic of getting more right than wrong and not letting our losses get too high, right? So everybody runs this differently, okay? So I have my riskier trading that I do with options sometimes where I won't take anything less than 100% profit on a certain trade. But I'm also willing to let the losses in that type of trading run much higher too, okay? So you've got to balance it. It's a balancing act of making sure your profits run higher than your losses. That's what it's all about, okay? With the options, you can trade $1,000 trades. You know what I mean? It's just different to the mini warrants, okay? So, but with this type of trading, guys, it's always, you want to be getting 20% more profits, okay? And make sure you're capping your losses below 20%, all right? That's what we're trying to do here. Okay, so where are we at now, though? All right, that's what we want to have a look at. So we've had a good run up, okay? And now we're still on trend, and we're still on an upward momentum. Let's go price up our trade. Okay, so basically all I have to do is grab the code BHPKCG, put it into my terminal here. Okay, the trade's now worth $9.94. Okay, all right, so let's get the calculator up. Okay, so if I've got it at 8.49, take 9. Let's say 9.94, wasn't it? Yeah, 9.94, 9.95. Okay, I'm up $1.46. Okay, so 146 times 300, which is the amount of mini warrants I did. I'm up $438. Okay, on a $2,600 risk. Okay, So divide that into 2644, okay? I'm at about 16.5%, all right? So look, I'm not quite at my profit target yet, right? So I'm still waiting for a bit more than 20%. This is sitting on that uptrend. It won't take much more. Probably need it roughly around that resistance there, okay? Now, depending on your risk, if you put higher risk, obviously you'd probably be able to take profit here. If you have 4 or 5 grand risk on this, you could probably already take profit. And this is the thing of finding where you stand with it, okay? That's what a lot of our clients do, right? They come in, they do the course, they learn our foundations, okay? And then they slowly adjust those foundations depending on their circumstances. You know, if they're putting $1,000 a trade on, they might aim for a higher percentage profit. If they're putting 10 grand on a trade, which some do, they're happy to take 10-15% profit. So it's about adjusting it, right, to suit your personal circumstances after time. All right, but that's a typical trade, guys, right? That's just showing you a typical trade of what we do, okay? All right, so let's flick through a few other stocks, okay? So I don't want to get too caught up here. Someone's asked me about Newcrest mining. That comes up a lot recently. Newcrest got smashed after the Fed announcement because the US dollar rallied, gold pulled back, and that's just the typical dynamic there, right? So short term, these guys got punished. Now, understand fundamentally, Newcrest is extremely cheap. Not only does it do gold, but it does copper as well. These guys are going to report extremely well. The problem is it gets caught up in that whole gold bundle of stocks. So if a bunch of people are selling gold ETFs, this falls. If a bunch of people are buying gold ETFs, this rises. So there's a massive disconnect between what this stock is doing and its actual PE ratio, right? This stock is so cheap, it's not funny, right? It's the same as Fortescue. It's just so cheap, it's not funny. It will have its time in the sun. I'm fairly bullish this stock. I think it should be at least $35, $36 stock in the long term. In the short term, though, it gets caught up with this whole gold ETF bit. So you need gold to really take off and people start getting behind gold again for this to really go up, right? This is going to go up or down depending on the sentiment of gold. And, so you got a lot of superhero, eToro type traders out there just trading these ETFs based on what they're reading about gold, currencies, and things like that. So just be wary. That's the world you're living in right now when trading something like a Newcrest mining. Technically, guys, look, it looks like it could be bottoming out here, right? So the uptrend's broken. It's pulled back. Not sure how to draw that downtrend line at the moment, to be honest. You've got a downtrend through there. You've accelerated down. It looks like it could be breaking up. What I'm looking for personally here to go long again is a break through this resistance level. Okay, there's a moving average. I think that's my 50-day moving average through here as well. I'll just make that a darker color so you can see it. There's some resistance here near that average. There's no surprise that's actually happening. If that breaks and there's a bullish signal, I'll be looking to go long. Right, so we're close. I'd be close to be trading this. There's still downward momentum, guys. Lower peaks, lower troughs. Lower peaks, lower troughs. That was a lower trough. It hasn't formed a higher peak yet. I need a higher peak before I trade this. Okay, so just chill out. Sit on your hands that little bit longer. Get some confirmation. I'm personally getting ready to go long. To be honest, guys. All right, getting ready to go long. All right, so that's Newcrest. Iluka, mineral sands, guys, look, it's not a space I understand closely. I'll have to admit that. So fundamentally, I've got absolutely no read on this stock at all. All right. It's not one that I trade often, but the technicals are nice. Okay. So you got a nice uptrend there. I'm not sure what caused that gap higher yesterday, but it's gapped up. Okay. Now you're looking a little bit bearish. This is very common to see, guys. Okay. That was a particular big move, right? It's just a massive move yesterday. Up over 10% in a day. It will have to give some back. Now, it's very typical in an uptrend that resistance becomes support. So that's the level you want to watch for now. If this level holds as support long enough, it will likely continue higher from there. So this will be a day-by-day proposition. Whoever put this in the list to have a look at, this is a day-by-day proposition now. If it breaks back below that support level, it's likely to come back near trend, okay? If it holds this level and gives you another buy signal, go for it, okay? That'd be my suggestion there. All right, let's keep going through. So someone asked about Tesla, okay? So let's have a quick chat about that. What's the code on here? Sorry, guys. It's, I don't usually use this platform for US. I use a different one for US, but here it is. TSLA.NAS. Okay, Tesla, guys. This has to be one of the most expensive stocks around the world. Okay. This is trading on absolute forward earnings. Okay. And even if I have a look at the 3-year projected earnings for this company, it's still running at a 91 PE 3 years from now. That's how expensive it is. Okay. So at some point, this will top out unless it completely smashes expectations. Okay. This stock will have to continually show hundreds of % of increase in earnings if it's going to keep going up. Okay. Every year, it has to keep showing hundreds of % increases in earnings. Right. Now, I'm not saying it can't do that, by the way. I'm just saying that's the reality. In trading something like this, it's a high growth stock. At some point, the market will fall out of love with it. So be careful. Right. This is not a buy, hold, and forget stock. Down here was a buy, hold, forget stock. Now, this is a trading stock. You trade what you see. All right. So the pennant's broken for me. Okay. You're now starting to get back onto a higher peak, higher trough type scenario. If you're going to trade this, guys, okay, short-term indicators are getting a bit overdone. You want to pull back, okay? This went too hard, too quick. These 2-day movements here, it's gone too hard, too quick. It has to take a breather. It's taking a breather. You've had 4 days of sideways movement. Now it's just a matter of when you get back in. This is your short-term trend through here. I'm going to get rid of the long-term one because it's creating too much noise. These are the key levels you're watching right now. This uptrend line, that resistance line. Let's see what breaks first, okay? It might pull back to trend, rebound, and go. It might go sideways for another week and go through resistance. I don't know. I don't have a crystal ball, but nonetheless, they're the key levels that people are looking at the moment. Wait for one of them to break and then trade from there, okay? All right, so that's Tesla. What else have we got? Z1P, Zip, okay, buy now, pay later space. I haven't looked at this stock fundamentally for a while. Technically, though, it's still holding this trend, right? It's still got an uptrend in play. That had a really big pullback through here. You can see that it went too hard. That was stupid, guys, yeah? Anytime you see a stock going straight up like this, right, you know one of these are coming, yeah? It's just a matter of when. Right? Every time you see a movement like that, guys, you know there's one of these coming not far off, right? When you're looking at trends, and this is one bit of information around technical analysis that you really need to remember, okay? The steeper the trend, the shorter in time frame it's going to last for. So if it's extremely steep, it might only last a couple of weeks or a couple of months, and then you're going to get a big pullback. The shallow trend can last for years. Have a look at this shallow trend through here. That long-term trend, it's shallow. It's not as deep. It's not straight up. What goes up must come down, right? If there's a nice shallow trend, it will last over time. And that's what we're seeing at the moment, is it's still obeying that longer-term trend. So right now, what you're waiting for once again is more confirmation. The momentum in this stock's gone. Yeah, you see it had huge momentum before. That momentum is dying out. Doesn't mean it's not tradable. It just means that you can't just buy the underlying stock and expect a 50-60% return. It means now you got to trade some leverage, right? So we're coming back to the longer-term trend. We've got a little bit of a pennant pattern here. What we're looking for is a typical buy signal off that trend. Okay, there's some support levels through here as well. So if it hits those levels, we're looking for a buy signal, right? So this is getting ready. I believe this is something you should be watching. If you get a buy signal soon, we'd consider a trade here. We really would. So how do we consider a trade here? Well, let's have a look. So I go into my calculator. let's see what mini warrants are available on this. So I might just have to refresh this quickly, guys, because it's been sitting too long. Okay, so Z1P. Okay, this is playing up in here yesterday. Then I went into my other computer and it was working fine. Anyway, so what should be coming up is all the mini warrants. My apologies, guys. There we go. That's better. Working this time. Okay, so the most leveraged mini warrant here, 73%. Okay, has a stop trigger level at 701. So that's a little bit close to comfort for me, to be honest, because I could just jab down one day and I'll get stopped out. I'm not happy with that. I'm going to probably go for a little bit less leveraged mini. This stock can move large, so I don't need a lot of leverage, right? For Z1P, KOB. Look, I'm going through this quickly, by the way, guys. If we were doing this, I don't know why it's doing this in this room. Sorry, guys. It's working perfectly on my computer at my desk, but then in here it's playing up. So basically, we don't show you everything in these webcasts. Okay, that's what the idea of the courses are. You can't learn how to trade just by watching one of these webcasts, by the way, right? So I'm just quickly going through this just to show you there is a process we go through in trading, okay? And this is an example of that process. Okay, so the price of that mini at the moment is $2.63, okay? Oops, sorry, which tab? Too many tabs open. $2.63. Let's say I put 2.5 grand risk on that. Okay, that means 1,000. Okay, so 1,000 means a max risk of 2,630. I can't lose any more than that on this trade. That's why I love that mini warrants, by the way. Okay, your risk is completely limited. Okay, and you've got complete control over your leverage, right? I will never get a client into an unlimited risk trade. Right? That's our number one rule here at Trader Circle. We do not do unlimited risk. Okay, we just won't do it. We just say no to you. Okay. All right. So basically, at the moment, let's have a look at Zip. Where do I think it could go? Well, easily $9. It got back up there last time. Now, where would I place my stop? Well, there's one of two levels I would consider my stop. One would be this support level through here that it's obeying at the moment. That's a little bit close. Okay, I want to give the trade some breathing space, right? So I'd be using this uptrend level. The best level of support or best stop level to use is an uptrend line, in my opinion, right? So around $7, okay, around $7, just above $7 there. So I want to measure my risk at that level, okay? It's roughly 23%, all right? So it's a little bit up there. I'll lose 30%, okay, if it broke through. So I don't want to put too much risk on, do I, right? Now, where do I think it's going? $9. Okay, cool. So let's come back here. I haven't even got $9 on the radar there. I'll increase my percentage movement until I can see $9. Okay, so $9 is here. So if it goes up to my profit target, I can make around 50% profit on this trade. Okay, so we're talking about a 16% movement, which is very common for a stock like this to do, right? It's a very volatile stock, all right? And if it drops down below 7, okay, as long as I get out quickly, I'll lose 20-25%. Now, if you want to look at it from a monetary point of view, we can, okay? What that actually, why is it doing that in here? Really, really strange, guys. Really strange. I've never seen that happen other than when I use this particular computer. There we go. It's working now. How strange. All right. So if it gets to my profit target of making making $1,200, okay. If it gets down to my stop, I'm losing around $600 to $700. Now I can adjust risk up or down, whatever you please, right? Whatever you're comfortable with. You could do lower risk, so that way you're only losing $500, $600. This is where you're in control, guys, okay? This is where you can adjust what we teach you to best suit your circumstances, okay? If you've got a 10 grand trading bank, guess what? You should only be putting 2 grand max on this trade, yeah? If you've got a 50 grand trading bank, well, you can beef it up to whatever you're comfortable with. And this is the idea of having calculators like this. So you can actually measure, okay, I'm placing my stop here. Am I comfortable with this? Okay. All right. So I think I've gone through quite a large chunk of those stocks that people have asked me to. The other one I'll just quickly point out, and I'll hand you back over to Karo real quick, is Sonic Healthcare. Today is not the day for this, but it is something to keep an eye on. The forward outlook for this stock is incredible, okay? So the current PE is quite high, but when you look at the forward 2 to 3 years, so they're expecting a massive jump in earnings, okay? If that does play out, this stock's actually really cheap here. It broke into an all-time high and it's pulled back, and I love uptrending stocks like this, okay? So you've got a massive, big long-term uptrend. Okay, what does it like to do? It breaks into all-time highs, pulls back, tests the resistance and support, and it goes again. This is an extremely bullish signal to me, guys, okay? But once again, it's all about timing, right? So what we're looking for is it's in a breathing phase, okay? It's had another push up. It's probably going to pull back again. If it pulls back to roughly 38, it shows me a buy signal. I'll be looking to go again, guys, okay? So just a bit of a hot tip, okay? For one to look out on is Sonic Healthcare. I'm not getting in today. I'll get in on the next pullback. Okay, that's what I'm looking for. All right, I'll love yous and leave yous there. Okay, we are heading into that 2 o'clock time frame, and we've got to have our afternoon meeting roughly around 2 o'clock. So I'll pass you back across to Karo. He wants to go through a few things. And then we'll call it a day. So I hope you enjoyed that part. Don't forget, throw some questions in if you've got any, and we'll answer them at the end of the webcast.
All right. Well, I hope you enjoyed, Tim running through those stocks and the different types of or how we trade them essentially using mini warrants, and they're a pretty powerful tool, as you can see. But they're only really part of the puzzle. As you can see, there's a lot of things that Tim kind of brought together that touch on a few key areas, which allows us to provide that professional advice to our clients and to trade successfully. So this is something that I ran through during the first webcast, and I want to run through it again because it's probably the most important thing that we talk about when it comes to education. Because holistically, this is what you need to focus on in order to be a successful trader. Right? And it can seem a little bit, maybe simple or reductive to kind of boil it down to 3 things, but that's honestly really about it. It's what you can see on your screen, the ability to pick direction. It's good to have different strategies under your belt so that you can trade different market directions and trade regularly to generate an income stream. And then you obviously want to be able to manage your risk effectively. Right. The only thing that you could argue would be outside that is managing your psychology effectively, and that's we could run a webcast just on that by itself, and it's something that we might consider doing in the future because, it's almost like psychology really encompasses everything, right? But it's a conversation for another time, perhaps. But in terms of outside that, we've got, those 3 things that you need to be good at, and what brings them together is a set of trading rules. So as I said to you during my last webcast, during part 1, if this is, all you take away from today's session, these 3 things that you need to learn, as well as have a good set of trading rules, then you've taken away the most important thing of the webcast, essentially, right? Everything else is kind of just proving those points, okay? The reason why I want to harp on this is that if you decide to become a trader, if that's something that you want to look at pursuing, then that's what you need to learn. And you can learn it from us, obviously, and I'm going to run through that in a moment. But make sure if you don't want to learn it from us, make sure you go and learn that from someone or something, right? So we do run a beginner's course, and I'm just going to spend the last 5 minutes explaining to you how we run that. So for those of you who are beginners and want to be able to learn to trade properly and effectively, this is something that's suitable for you. Otherwise, you could have a bit of experience and maybe you're not exactly achieving the results that you want to achieve. This is also suitable for you as well. So as I said, it's really there to fast track your learning, right? It's about getting you taking you from where you are now and getting you to where you want to be much more efficiently. We find that people who go down the path of self-education by watching these types of webcasts or watching YouTube videos or reading books are probably much more successful as investors, right? That path we've only ever really seen work from an investment perspective. So, you know, there's some great books on longer term investing, and there's some good books on trading as well, but we have never really come across anyone who is, you know, a successful trader for good periods of time that's self-taught. And the reason I feel that is because ultimately, you know, investing is inherently lower risk than trading, right? Because if you think about it, trading is about, you know, taking profits fairly regularly, generating an income stream. And so what you're doing is you're trying to make more money, aren't you? It's in a shorter period of time, right? And if you're making more money in a shorter period of time, then you can also lose more money in a shorter period of time. Risk has to be a function of return, right? I mean, that's very basic trading principle. Risk has to be a function of return. And so you can't really, not people online now or myself or anyone in this room, are in really a position to make good risk-free money, right? And if that's the case, then, you know, things that are inherently more risky, right, that inherently have more reward, are also, you know, you would think need more education. You need a greater skill base and more experience in order to be successful at those things. Last Thursday, I used the driving a car kind of analogy, which is not a bad one. You know, if you want to get from A to B, you can walk, and walking doesn't take a great deal of risk, and it doesn't have a great deal of payoff, right? I mean, you get there fairly slowly in comparison to other methods of transport, but you also, you know, there isn't a great risk of you crashing and burning. I mean, if you fall over, you'll graze your knee maybe, or you might break a hip. You know, obviously terrible things can happen. Let's not split hairs, I should say, but for the most part, very low risk, but a very slow approach. It's something that you learn, you know, you would think as a child, and you don't really ever forget how to do it, and it becomes all rather, you know, it doesn't require a great deal of skill or experience. Driving a car, on the other hand, is much more complicated, isn't it? I mean, arguably, aside from maybe your computer that you're watching this webcast in, the car is probably one of the most complicated pieces of mechanical devices that you own, and it gets you from A to B a hell of a lot quicker than walking, right? But you can't just get into a car and turn the key, put it into drive, and then off you go. You know, there's obviously a really good chance that you don't do well. And if you tried to teach yourself how to drive a car, chances are that probably didn't go very well either, right? So, you know, typically when you're trying to learn something that's risky like that, which we, you know, a lot of us do every day, right? We all get into cars in the morning and or on the weekends, and we drive from A to B going 100 kilometers an hour, where everyone in this room knows if something bad were to happen at those types of speeds, it's obviously not going to be too friendly, is it? So, but we're willing to take these risks, and we're willing to take these risks every day, and we see them as low risk. I mean, sometimes we don't even think about the risk, right? Because we have the skills that we've developed, and we've got the experience that we've got, right? And we didn't self-teach. We had someone tell us what the rules were in terms of the road rules. Your mum or your dad maybe, or your uncle or whatever, sat you down in the car and kind of held your hand and showed you how things were done. And then you passed an exam, not just written, but also practical. And then finally the government kind of says, all right, well, you're licensed to do something. And obviously people still crash, but it's a risk that we take. So that's a really kind of, I mean, I labored the point there a little bit, admittedly, but that's the gesture of things, right? The walking compared to the driving kind of analogy. And there's nothing wrong with wanting to do one over the other. But if you are wanting to drive a car, it's just really important that you get a good education. Now, that can come in the form of doing a course like this, right? Or it could come in the form, you could read books and you could watch videos, but you at least still want to have a mentor. You want to have someone who's there to check you, right? I wouldn't encourage you to seek a friend to help you do that, because that can put sometimes a strain on your relationship. That hasn't turned out well sometimes in the past. What you're best off doing is finding a professional who can mentor you. That can be us once again, or you could do our course where we give you both. Not only do we give you professional education, but you also get your own personal trainer. So it begins with a 2-day face-to-face training session in our boardroom. We fit about 8 to 10 people in the room. You know, with COVID, you can do the live stream if you want, but obviously we find it's a little bit better when you're face-to-face. But if you're interstate right now and you're in the middle of lockdown, well, unfortunately, you're going to have to either wait until we do a face-to-face session or do the live stream. The live stream is just as good. You know, it's you can see Carlo, his face as he presents, and you can see his screen, and you can ask questions, and it's fully interactive, everything like that. So it's like being in the room, but you just obviously do it from the safety of your home. Now, Carlo Castellano is a name that you've probably heard of before. He's been teaching and trading for over 25 years. He's the co-founder of Traders Circle. He's semi-retired now. He trades from home, basically. He still provides recommendations to our clients. He still runs the education. But Tim took over the role of head of the trading desk a few years ago when he decided to kind of semi-retire. Yeah. So you're not only learning from someone who is a professional trader, but you're also learning from someone who's a professional educator. And that makes a huge difference when trying to learn these kind of complicated subjects. Now, the 3 things that we focus on are those 3 things that we think you need to learn in order to be successful: picking direction, strategy, and risk management. And we bring it all together through a set of trading rules that Carlo has developed over the past 25 years. So the trading rules you get taught are the exact trading rules that Carlo has tweaked and changed and evolved that he uses to this day, right? So whenever Carlo puts out a trade recommendation to our clients, he's actually using the trading rules that we teach you to use for yourself. Now, further down the line, you know, as you get to understand yourself more and your own risk tolerance, you may tweak those rules, because rules do need to be tweaked to suit an individual. But these rules and what we teach you are a great foundation on what to build off. Okay, and that's what we're trying to do here. We're trying to build a solid foundation that you can start with during your trading career. In terms of picking direction, we focus on technical analysis, which I ran through quite extensively, I would say, in the last webcast. So if you want to refresh up on that, you can always go watch some YouTube videos. You can go catch the recording of the previous webcast. But we find technical analysis much more suitable for shorter term styles of trading. We focus on strategy, mini warrants, and we focus on risk management. All right, all the things that we've kind of covered during this and last session, and obviously a lot more as well, right, over 2 days. After the 2-day session, you actually get access to a whole lot more of extended learning. And again, I think this is what really separates us from other businesses. This is not something that you learn overnight. And our business is really focused on building long-term relationships and retaining clients, right? We don't run these courses very often. We only take in about 8 people. And that way, we really want to be able to focus on you as an individual as much as possible. So following the 2-day session, there's extended learning that comes across through online videos. There's daily webcasts that we run. And again, I think that's very unique to our business. Every day from 12 to 1, we run a webcast that's live where we go through the market, look for trades. Tim runs his on a Tuesday. Sam ran his today. Sam's the other advisor in the office, one of the other advisors in the office. I run mine on a Wednesday, etc. And so that's every day from 12 to 1. And if you can't make the session, we record it and we place it on the website. And the reason why I'm kind of making a point about this is it's very similar to what we've just run through. So how Tim has kind of run through the stocks and run through the trades is similar to what we do every day, except obviously it's going to be less basic. It's going to be a lot more advanced. There's going to be a lot more dialogue between the advisor and the people attending. So old clients and new clients jump on. We all just look for trades in the market together. So that's a huge asset for when you're trying to learn, but it's also a huge asset for when you're trying to trade as well. We also give you daily market updates. We'll give you trade suggestions. We'll give you access to all the technology that we use, like the calculators and the trading software. And again, most importantly, you get your own personal trainer. All right. You can call them anytime you like. I mean, we really encourage you to be in contact with them very regularly to make sure that you're doing everything correctly, right? Your trainer's there to make sure that you're not making those silly mistakes that you're certainly prone to making as a beginner, right? And once you're ready to actually trade with real money, they're there to hold your hand as you transition to live trading. During the 6 to 8 weeks, during the extended learning, for about 6 to 8 weeks, we'd run a paper trading competition. And that gives you just an opportunity to practice your skills without having real money in the market, though the winner does get a prize. So there is something at stake, but the goal is to try and simulate real life as much as possible. So we give you like a kind of demo account thing. And the idea is that, you try to make the most amount of money using the skills that we've taught you in that 6 to 8 week period. And when you're ready, like I said, we're here to help you transition to live trading. At that point, you might continue to work with your trainer. You might jump across to a different advisor that suits more your style a little bit more. Ultimately, that's really the core of our business. It's this step here. Education is not really a profit center for us. It's something that we do as a stepping stone. We want to be able to equip you with those skills and help you get good at them, because ultimately, the majority of our business comes from you staying a client and continuing to use our services. So it's within our best interest to get you to the point where you're feeling confident in your trading and that you've proven to yourself on paper that you can turn a profit, and then you actually start trading with real money, right? Now, in terms of the investment of the program, you pay a deposit of $995, and then 1 month later, you pay just one more payment of $995. So the total investment is just under $2,000, and that includes the 2-day workshop. It includes 2 months of online training where you have access to a plethora of online resources to help you learn, the daily webcasts, the trade recommendations, the software, the calculators, and you get your own personal trainer. Does that sound reasonable? If you were interested in coming along and doing the workshop, the next one that we have is on the 24th and 25th of July. Okay. Now, again, if you are local from Melbourne, you can come in, but if you're interstate, you could plan to do the live stream, and if your state comes out of lockdown, then you can always fly down if you want to. In fact, the majority of people interstate do like to fly down, but we have to work with what we've got. All right. I've gone a little bit over time. Forgive me. If you do want to review these sessions, again, they're recorded, but otherwise, we really appreciate you guys taking an hour out of your busy days to come and listen to what we have to say. If you've got any questions that, you remember, you wake up in the middle of the night in a fever with a question that you meant to ask, just give us a call. You can chat to myself or you can chat to Tim about that, or you can have a chat to my colleague, Jared. Jared is our market advocate. He will be able to place you in the right place, right? If you're not exactly sure what you want to do or how you want to do it, Jared will be able to hopefully point you in the right direction. All right, we might finish up there. Guys, thanks very much once again. Keep an eye out for other webcasts that we run. And as we say here, good luck and happy trading.